Everyone benefits from real estate tokenization. Now, real estate would never be as liquid as your traditional securities. Real estate would always be more of a OTC product, tokenizing their real estate, not to raise capital, not to gain liquidity, but more so for the purpose of estate planning. Retail investors are going to be the first ones to adopt. The problem is going to be with your sophisticated investors. The trading volumes are all made up by institutional investors.
In 2021, we have seen tokenization industry start growing exponentially, with the number of tokenization platform and projects just exploding. Today, we will be reflecting on the reasons for this growth and the future of the tokenization market. Our today's guest, Mohsin Masud, is an experienced real estate investment executive who recognized the benefit of blockchain and launched a platform for fractionalized real estate investment. Mohsin, it's a pleasure to have you with us today.
Thank you so much for having me. It's an absolute pleasure.
Welcome everybody to Stobox Interview, a video series where we bring industry rock stars to discuss the future of crypto, tokenization, and capital markets overall. I am your today's host, Boris Pikalov, co-founder at Stobox. Please don't forget to subscribe to the channel and turn on notification so that you don't miss other fantastic interviews and educational videos that provide you with an edge over everybody else in terms of knowledge and understanding of the market. And now let's proceed straight to the interview. Mohsin, please tell us about yourself and your activities.
Sure. So I'm the founder and CEO for AKRU. I was born in Islamabad, Pakistan, and I went to high school, did all of my early education in Pakistan, ended up going to York University up in Toronto, Canada for my undergrad. From there, I moved to the Middle East and was living in Dubai and managing our family's real estate portfolio over there. While managing the portfolio, we experienced the 2008 crash at that time, which led to me managing a global portfolio and not just our Middle East portfolio. At that time, I decided to expand into the North American market purely because of the opportunity that it presented. We focused with our first investment in Toronto, followed by all future investments across the West Coast. So we invested in LA, Phoenix, Arizona, Scottsdale area as well, and then in Reno, Nevada. In 2014, I moved from LA to Cincinnati, where I set up my own shop and moved away from the family fund. At the family office, I was managing about 500 mil of assets under management, just a little over that. After opening up my own shop, raising capital from friends and family, I was managing about a tenth of it, so about 50 mil of assets under management. It was while managing some of those assets that we experienced a redemption, and that redemption kind of led to a whole snowball effect, which led to the formation of AKRU. But yeah, that's a quick rundown on who I am and what I've done. I studied as I said, at York University for my undergrad, then at Harvard Business School, Graduate School of Design at Harvard, and most recently at Saïd Business School at Oxford University.
Thanks for the introduction. Please tell us more about why did you decide to start AKRU and shift from common real estate to tokenized real estate?
Yeah, so that one redemption. Now, our minimum investment used to be about $250,000, and the investor who called in a redemption was a relatively larger investor in the project. That led to me going to a few road shows or going on the road and trying to raise the capital to fulfill the gap that was created by that redemption. I met one of my friends up in Toronto, and he explained to me what blockchain was. And he literally asked me, "Do you know what blockchain is?" I was like, "Yeah, I know what Bitcoin is." It's like, "No, blockchain, the underlying tech." It's like, "No idea what you're talking about, man." But that dinner went on for a few hours, and he gave me an in-depth, quick crash course in blockchain. And while he was explaining the immutable ledger, the instantaneous transactions, smart contracts, and other aspects of blockchain, it's like, wow, this could really resolve so many of the problems that I currently have. from reducing the minimum investments to accepting more investors to investor management, escrows. There's so many inefficiencies within the current real estate system and mechanics that problem seemed to resolve. Um, However, I did realize that this was going to be a securities product, and this is going to be something that we have to deal with SEC and FINRA and CFTC and all of those 3 and 4 letter agencies in North America if we want this to be a regulated and approved product. And that's exactly what we wanted. We wanted to be based out of the US, and we wanted to have a 100% compliant platform. That presented a major uphill battle. A couple of years of back and forth with the SEC. It wasn't until 2019, August of 2019, till we actually went ahead and made our first tech hire. So we spent from about January of 2018 till August of 2019. All that we were doing was research and negotiations and trying to figure out a pathway to come up with a platform that is 100% compliant and can offer digital transactions and digital securities for real estate investments within the US. At that point, we brought on our first developer who was based out of Singapore. He had worked on some of the largest exchanges out there at that time, and we started to develop the architecture for what is now AKRU. We've got a fairly unique structure to it. That's how we ended up getting into it, just because of the reasons that it resolves so many inefficiencies in the current systems, so many problems with it within the current scenario. Whether it's the high minimum investments, or it's the illiquid nature of real estate investments traditionally, right? Or it's the inefficiencies within the systems, with all the intermediaries which get involved, be it escrow agents, be it transfer agents, be it anyone and everyone. And all of that creates a lot of problems and slows down the current real estate market. Now, I say it slows it down, but mind you, over the last 20 years, the average commercial real estate transaction volume in the US has been about $320 billion each year. That accounts for about 60% of global commercial real estate transactions. That $320 billion represents a low of about 95 or $96 billion in 2008, and a high of 590 some billion dollars last year. There's a lot of transactions that already happened, but they're extremely inefficient, and we saw the need for and a solution for resolving for those inefficiencies, and most importantly, enabling liquidity in an illiquid market.
Cool. Thank you for your intro. Probably it's been not an easy journey, but definitely a worthwhile one.
Oh, indeed. It's been what, 3 years, 3.5 years since we started off. Very long and fun journey for sure. Very interesting. It hasn't been easy to make sure that we remain compliant, especially when you're self-funding the company to start off with. You're putting in 6-7 figures out of your own pocket before you even go out and raise a friends and family round or an angel round. And now, we recently closed on our Series C, where we had Draper Goren Home lead the round. So getting that institutional backing and that nod of approval / confidence coming in from big names like that really boosts our confidence and helps us get to the next level.
It's great to hear about your progress, and definitely large investors help. Moving on to speaking more specifically about tokenization overall, in your opinion, which companies in the real estate industry will benefit the most from tokenization? Is it construction companies or asset managers or somebody else?
Look, everyone benefits from real estate tokenization, be it your smaller retail investor eventually when it opens up to that market segment, or be it your institutional investors, be it your day-to-day small real estate development companies, or be it your large institutional asset owners, be it large family offices that own a lot of commercial real estate, or be it small single families offices or individual families that own real estate that can benefit from tokenization, right? We're working with large institutions, large financial institutions, banks and trusts, which are making use of tokenization and are benefiting from it. We're also working with individual families with a few $100 million worth of real estate, where they're tokenizing their real estate not to raise capital, not to gain liquidity, but more so for the purpose of estate planning. Estate planning is a major issue when it comes to large real estate assets. You know, you have families that own a lot of properties, that they have 4, 5, 6 kids or heirs to the estate, and 2 of them want to continue to own part of the real estate, and 4 of them don't want to continue to own part of the real estate. And then you have a lot of issues with who's going to own what, and or what portion of it, and then what do you liquidate, what do you keep, how do you keep everyone happy, and so tokenization resolves for that as well. In another case, we have a large insurance company where tokenization is helping them reduce the insurance level on it because of the transparency that we're providing through our data services as well. You know, reducing their insurance requirements from significantly reduces their capital reserve requirements on their books. Another company, a major hospitality player, wants to move away from owning the real estate, wants to remain in managing the real estate only. So very beneficial for them as well, where they're selling most of the equity within their real estate holdings, and they're going to continue to operate, manage and operate those hotels. You know, similarly, we're speaking with local developers, and we've got a few small developers who are very regional or very local, and they're you know, instead of selling their assets in the open market and losing any chances of any upside benefits in the future, they're listing some of their stabilized assets on our platform and retaining partial ownership in them while providing liquidity to their LPs, right? So a lot of the developers or a lot of people, sponsors or syndicators who are syndicating these deals, can't provide liquidity to their LPs unless they sell the asset or they refinance it in 5, 7, 10 years. And this is a great tool for them. And at the same time, we have certain individuals who just wanting to retire and don't want anything to do with management on those assets, and they're benefiting from it as well. So it's the entire spectrum of real estate owners, and there's one form of benefit or the other for each interested party, be it a large family office, a large institution, or be it an individual asset owner.
Though I never cease to be amazed by the breadth of possible applications of business model that tokenization opens. So, for example, the one you mentioned about the estate planning, this is, even after being so many time on this market, this still has been an insight for me that this may be an important issue for large asset owners.
Yeah, it is. So, you know, I'll without naming the family, I'll give you the example of a family. You know, they own few $1 billion worth of real estate, and they've got 5 kids. Out of the 5 kids, only 2 of them are interested in owning the real estate, and this family has no outside investors. The husband and wife have developed the entire portfolio over their lifetime. You know, they're 75 plus, both of them, and they don't want to sell the portfolio. Having said that, 3 of their kids don't even live anywhere close to where they live, or close to their headquarters, and you know, they're not interested in owning any piece of any real estate. They just want to liquidate it, and they want to invest in other things. So for them, this is a great way where kids who are interested can continue to operate those buildings and manage those buildings through their management company, and they can take a more active role in their operating company, and they can continue to own whatever percentage they want to own, be it 10, 20, 30, 40, 50%, and their siblings can go ahead and sell their interest on the secondary market as and when they choose.
It seems that one of the very important requirement for all of these benefits to be enabled is liquidity. So it would be interesting to hear more about how do you enable liquidity, because this is in the last few years this hasn't been an easy issue, specifically given that exchanges require a lot of regulation. And in 2021, there has been many new developments, such as, for example, alongside centralized exchanges for tokenized securities, decentralized ones has been developing. We at Stobox are doing one of such. So it's very interesting to see your take on the liquidity of tokenized securities.
Yeah, see, liquidity on tokenized securities is a separate topic. Liquidity in real estate is a separate topic, right?
Mm-hmm.
Real estate is, there's a reason why we developed a platform that is very, very specific to real estate and real estate only. There's a reason, if we wrote our smart contracts from scratch to tokenize any security, we could use the same smart contracts to tokenize uh, this cup, if anything, right? And you know that, you understand that, right? But the way that we wrote our smart contracts, the way that we structured our platform, the way that we've kind of architectured the entire product is very specific to real estate. We're not a platform where you need to go to a third party exchange to go ahead and list your tokens. Our transactions are all fiat based. They're not crypto based. We don't require any such um, any such conversions or funding sources from within crypto for people to invest into real estate. When people are trading on the secondary market, it's not a traditional buy sell matching service that you would see on
Mm-hmm.
exchanges. Real estate has a uh, uh, very unique aspect to it, where everyone likes to negotiate and everyone likes to maximize on the value that they can get for their real estate or their asset, and that's what we've enabled. So the only time when the price on a token is set is the initial offering, right? After that, it's up to the token holder how much they want to list the token for. If I buy a token for $1,000, I can list it for $10,000 tomorrow. It's not necessary that someone will buy it at $10,000, right? But the way that our platform works is that while I have it listed for $10,000, you have the ability to put in an offer for $900 or $9,000, whatever you as the buyer feel like it is worth. And you can come in and you can place that offer. So having the ability to negotiate, have those back and forth uh, negotiations of sorts and communication of sorts, and having the confidence of instantaneous transactions as soon as a strike price is confirmed, that's what makes our platform unique, and that's what we think would really help in enabling that liquidity within the real estate side. Now, real estate would never be as liquid as your traditional securities. We have to understand that, and we have to accept that. Real estate would always be more of a OTC product, right? So over the counter, you still have plenty of OTC exchanges out there trading low trading volume stocks, which are not as liquid, and that's what we expect real estate to be, and that's how we expect it to remain. But any form of liquidity is adding a significant amount of liquidity within commercial real estate. And so we're enabling that liquidity aspect to it. We're letting you sell your share to a large number of approved investors on our platform. We're making it, we've made it into a very closed loop system. So while it's very commonly misunderstood that anything that's blockchain or anything that has to do with crypto is going to be decentralized. Having a distributed ledger is decentralized, yes, but the platform in itself for AKRU is extremely centralized. That's what ensures compliance for us, right? We need to do our KYC, as I'm sure you do as well. We need to do AML, not just on initial signups, not just screenings, but also transaction tracking. Right? So all of that really requires it to become more of a central platform. When it becomes a centralized product, enabling that liquidity really really becomes a slightly easier aspect to it as well. And then we've got additional products on our platform as well, right? So we've got we're introducing margin trading where people can actually borrow against their interest, or using their security tokens, they can borrow against their equity. So if I have $10,000 of security tokens in an approved building, I can borrow $5,000 against it, right? So we're enabling additional liquidity within those investments as well. And then we're bringing in some market makers. We're providing guaranteed liquidity, and that guaranteed liquidity comes at a price. While fractionalizing an asset and by enabling a secondary market, there's liquidity premium that gets added on to the value of the asset, right? That's just how assets work. When they move from a private market to a public market, there's a premium that gets added on. That it becomes more easily accessible, and it's the exact same thing that happens within real estate as well. That we've seen before as well, and we've got multiple assets on our site where it's established that is the case. The guaranteed liquidity portion comes in at a discount. So if you need money right away, the market makers will provide you with an offer which is going to be lower than the suggested price on these tokens. So we do quarterly valuations on each asset, and quarterly price guidance by our fund administrator on each asset's tokens, and the market makers and the lenders base their offerings based on those quarterly price guidances. And having the data available, having those quarterly price guidances available, having leverage available, all of that helps in increasing the liquidity and ensuring liquidity within real estate tokens, at least. Again, I won't comment on all digital securities or all security tokens, but there are ways to enhance that liquidity, and there are ways to make a market more liquid, and those are the steps that we've taken to do so.
That's a very this is something that I would call a very realistic and reasonable approach to real estate liquidity. I've often seen people being probably overly optimistic or overly simplistic regarding how do you create liquidity, and
Right.
I agree that there are multiple layers and aspects to it. This is, to be honest, our approach as well. To majority of real estate clients, we suggest that for them, especially if they have primarily target primarily larger investors, the trading of whom will cause large price swings, that trading via such P2P transactions may be a more feasible solution. But obviously, it's always useful to add some things on top of it, such as in our case, it's market making, and what you mentioned about lending and borrowing as well. But given our strategy is rather to offer it not directly on our behalf, because we're not a regulated company, but instead plugging in our clients into DeFi protocols so that they could do market making via automated market making protocols and provide lending and borrowing via lending protocols. It's tricky from a regulatory perspective. Probably we would still have to work, at least for some kinds of securities, with broker dealers. So, but I still believe that this is the way in which the market should develop. It isn't a single kind of solution.
You're
So many
absolutely
people
right.
I found have a relatively simplistic idea, like you list your token on exchange like similar to Binance, and you get this very frequent trading. While in reality, it's for different kinds of investors, for larger, for smaller, with different kinds of needs, and different sources of liquidity.
Yeah, and you have to realize your traditional real estate investor, or even your sophisticated investor who's looking to invest in real estate, doesn't understand the red and green charts on a traditional exchange. They will not know what they're trading their real estate token based on. See, the thing with real estate tokens is it has an actual asset that is the underlying asset, and the value purely depends on the performance of that asset and the value of that asset. And that's something that really has to be explained to the people who are buying the asset, or they really have to understand what that value is, or what the performance on that asset is. And that's where real estate becomes really unique. You have to realize majority of the real estate owners, maybe not investors, are going to be more older people, especially when talking about commercial real estate, or are going to be more institutions, and they're very risk averse. If you tell them that they got to go to a DeFi protocol to gain liquidity, they don't want to overcomplicate things. They while they may have their own exposure to cryptocurrencies, when they're investing in a stable asset like real estate as an inflation hedge or as something that is an investment that is not correlated with the stock market, they want to make sure that it doesn't have the volatility that crypto could possibly bring in with it as well. They want the stability there. We have people investing their IRA dollars. So one of our customers is, or one of the investors on the platform is someone who is just about to ready to retire. He's moved about 30% of his IRA dollars onto our platform and is making investments in real estate using his IRA dollars. The biggest thing for him is, instead of putting that money in mutual funds and bonds, where he's getting 75 to 100 basis points, and with 4% inflation, he's actually losing money on that money. But that's safe. That's a safe investment for him, right? As opposed to that, he's putting the money in real estate, which he also considers a safe investment, where he's getting that hedge against inflation with the increased values, with the increased income being produced by these assets as well. But at the on the flip side, if he had to go to a DeFi protocol, or if he had to receive his returns in crypto, right? Be it Bitcoin, be it Ethereum, the volatility within it. Like, even if you look at Bitcoin going up to what, 65,000, coming down to 50K or just under. I didn't look at the price exactly this morning, but it's just the up and down and the volatility within it is something that those investors are not willing to bring into their safe investments. And it's the same thing with institutional investors. While they may hold their own portion of Bitcoin or other cryptocurrencies, or with individual investors, they may have their own portion of Bitcoin and other cryptocurrencies. But when they're investing in something as stable as real estate, they want the stability to be there. So that's our biggest concern with going into DeFi protocols and staking and other forms of liquidity being provided by third parties. That's a big issue. And most importantly, you have to realize this: until and unless the user experience is seamless, you're not going to have that mass user adoption. And that user experience, unfortunately, with cryptocurrencies and with a lot of blockchain projects, is not seamless. It is not a simple sign-on process. There's wallets that come into play. Someone has to remember their passphrase and the secret keys and this, that, and the other, and their public keys and private keys. And if someone loses that, there's so much fear against a lot of that you're not going to get the adoption if that's the route that you still continue to go for. Or that's my belief, at least. And that's how we've kind of set up AKRU. It's self custody, but at the same time, it's you don't deal with wallets and keys. And the product that we use is very simple and very easy for people to utilize.
I tend to partially agree with what you say. I agree that things like DeFi should be hidden in the backend, like so that in the front end the experience is as seamless as possible. This is one of the reasons why, for example, we integrate with custodial solutions, so that investors they do not need to come with their own wallets if this is problematic for them to create ones and to store token there. Although I think what we will see in the next years is investors becoming more sophisticated, even relatively, retail investors becoming more sophisticated and more used to different kinds of crypto solutions, such as staking or such as farming, for example. So there are kinds of crypto solutions that are, on one hand, relatively not very risky. For example, staking USDT in a lending protocol is not very risky, because this is a stable coin, and if the protocol is relatively large, then you are exposed to additional risks, such as the technical risk, etc. It is comparatively lower than when investing in Bitcoin. So I think given that the greed is one of the strongest forces in human nature, and And such kind of crypto solution allow you to increase the yield you get on your existing crypto assets. I think over time we will see this adoption, and it may not even be the long time. I think like only a few years ago, even the mere idea for more or less decent institutions of investing in crypto has seemed like something very unlikely. But today you see it is considered a normal part of the portfolio. So I think that people will start staking and farming very soon.
You're absolutely right. The problem is not going to be with the retail investors, Boris. The retail investors are going to be the first ones to adopt. The problem is going to be with your sophisticated investors. And when I say sophisticated investors, I mean the accredited investors or high net worth individuals or your existing real estate owners or people who own or control a large chunk of the wealth, which will end up owning or controlling large portions of the trading volumes on any of these platforms, right? Be it AKRU, be it Stobox, be it any other platform. Even if you look at the New York Stock Exchange, while if you look at the total number of investors, retail investors account for much larger number, hundreds of times the number of institutional investors on the New York Stock Exchange, right? Maybe thousands times larger than the number of institutional investors. But the trading volumes are all made up by institutional investors. Barring GameStop and AMC, it's the institutions who will define volume and trading activities on any exchange or any kind of market making activities per se.
It is true. I agree that it will be some time until, and maybe longer time until institutional investors adopt such kind of solutions. They will have to do it anyway as well, because it provides asset managers with a competitive advantage. If I can offer my investors as an investment fund higher yield because I utilize additional enhancement of this yield in DeFi, it will become eventually easier for me to raise capital. So it's only a matter of time, I believe.
Yeah. Agreed, for sure.
Okay, our time for this interview is coming to an end. So I wanted to ask you for a practical advice that you could give to entrepreneurs or mature business owners coming into the security token space, either as issuers raising capital or starting their own ventures. What advice would you give to them?
Yeah, look, it's the technology piece, while is a very unique aspect to it, and you always have to understand how the technology operates and if it's a good fit for what you're looking at doing. It's a regulation piece that you have to be more concerned about, and that's what you have to be more careful about. We're big believers in ask for permission so you don't have to ask for forgiveness, and that's something that usually leads to a lot of success for a lot of the larger companies, as well has led to success for us as well. So, while certain ideas sound very interesting and very unique and they sound great, don't be afraid of what you're getting into. If you believe in it, go for it, but make sure that you're remaining compliant. You don't want to start something up that's going to get shut down by the regulators, or you're going to get some form of action from the regulators because you're not keeping it compliant. You have to be very, very careful about that.
Thank you for an insightful reply, and generally for the great interview. I can definitely see that you've been spending a lot of hours for the last 3 years doing the practical work and not simply theorizing about tokenized real estate. So it was a pleasure to have you with us on the interview.
Absolute pleasure. Thank you so much for having me. You have a wonderful rest of your day.
You too. And to our viewers, please don't forget to like the video so that it gets higher exposure. Share it with the people in your network for whom it can be interesting. And definitely sign up for our YouTube channel and other interviews with professionals of such a level. And see you in the next episode.
Thanks so much. Bye.